A very common question, or maybe even sort of a concern, especially when it comes to newer investors, is would they be better off buying into something like the Schwab US Dividend Equity ETF known as ticker symbol SCHD? Or would they be better off spending their hard-earned money and investing into the tried and true Vanguard S&P 500 ETF, ticker symbol VOO, which to be honest has performed amazing over the last decade plus? Now, even though both these ETFs have some similar things in common, these ETFs are honestly very different. So in this video, I'm going to break down SCHD and the VOO ETF. I'm going to share with you guys what both these ETFs are, how they work. I'm also going to share with you some of the main differences and maybe some of the selling points on whether or not you want to invest into each one of them. But then towards the end of the video, I'm going to give you the answer that you're looking for. The answer being, would you be better off buying into the VOO ETF or SCHD? So if you're a long-term investor and you've ever thought about either investing into SCHD, maybe you already hold on to some shares, but also know that the Vanguard S&P 500 ETF is very hard to beat. Well, then make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now first, just to go over some of the basics, the Vanguard S&P 500 ETF known as VOO invests in stocks in the S&P 500 index, representing 500 of the largest US companies. Now the goal is to track the index's return, which is considered a gauge of the overall US stock returns. Now, I remember when I first started investing almost a decade ago, I heard a lot of older investors that have been around for a while, say to me that you're better off buying into a low-cost index fund like VOO that tracks the S&P 500, cost almost nothing to hold on to, and honestly just sort of set and forget your portfolio and watch it compound. Now, me being a stubborn 20-something-year-old, like a lot of you guys might also be, I thought I was going to be better off stock picking, so I did not take their advice and buy into the VOO ETF when it was trading at much less than it is today. Now, that being said, for newer investors, buying into a high-quality ETF, whether it's SCHD or VOO, DGRO, any of the high-quality, low-cost ETFs, I think that's honestly a perfect idea, especially if you're just getting into investing, to build a strong foundation, a diversified one at that. But again, that's besides the point. Now, SCHD's objective is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. And SCHD is going to be much more of a dividend-oriented or dividend growth-oriented ETF, although this ETF also has grown nicely over time, where VOO, on the other hand, is going to be much more of a growth ETF. Now, to be specific as far as dividend yields go, VOO offers a 1.21% yield, where SCHD offers around 3.5%. So by buying into SCHD, you're getting around 3 times as much cash flow. But again, cash flow is only one of the important metrics, not the only metric you should be paying attention to. Now, both VOO and SCHD are cheap to hold on to, although SCHD's expense ratio is double that of VOO, but again, 0.06% is still very cheap. Both these ETFs are well diversified, although SCHD only tracks around 100 different stocks, where VOO offers exposure to 500 individual names, which is going to give your portfolio some much needed diversification, again, especially if you're just getting started with investing. Now, some of the top holdings in VOO are names like Apple, Nvidia, Microsoft, Amazon, Facebook, Google, Berkshire Hathaway, Broadcom, Google, and of course Tesla. Now, the top names in SCHD, I mean, this is almost embarrassing to compare the two. We have names like AbbVie, Amgen, Coca-Cola, Verizon, Pfizer, Cisco, Bristol Myers, Chevron, Altria Group, and PepsiCo. Now, even though SCHD is my personal favorite ETF, I will say that some of the holdings aren't necessarily as favorable or as flashy as some of the top names in VOO, for example. Now, that being said, SCHD has still performed amazing over time, which I'm going to share with you here in a second. So whatever SCHD's stock picking methodology is, it's obviously working somewhat. Now, it's not only the holding breakdown, which is very different when it comes to SCHD and of course VOO, which that alone could be enough to make you want to buy into one or the other. If you want exposure to some of the higher growth potential names, I mean, VOO is definitely going to offer that, at least potentially. But also, like I said, VOO only offers around a 1.3% trailing 12-month dividend yield, where SCHD offers around 3.6%. Now, also looking at dividend growth, over the long term, SCHD has offered 11% dividend growth rate, where VOO, on the other hand, is only offered around 6 or 7% dividend growth, which is still not bad whatsoever, but we do have to chalk up dividend and dividend growth to a win when it comes to SCHD because there is just so much more cash flow potential. Now, if you're a relatively young investor that's just trying to stash away more and more shares of an ETF that's going to have a massive total return, then honestly, in my opinion, I could be wrong, of course, but VOO is probably going to outperform. Now, that being said, if you're someone like me that's trying to build out a dividend-focused cash flow portfolio that's going to pay you more and more in dividend income year after year, then SCHD ETF is going to probably be a good option for you. I mean, based off of historical performance, SCHD's dividends have been growing and growing and growing year after year. I mean, even since I started buying my first few shares of SCHD around 3 years ago, I'm getting paid a nice chunk more in dividends just over the past few years. But the reality is that the top holdings like Apple, like Nvidia, like Microsoft, I mean, just those 3 names alone make up a nice portion of the entire VOO ETF. And unless names like these are going to slow down anytime soon, it's going to be very tough for any ETF or stock to outperform VOO, just again because some of these names, although they don't offer tons of income potential, dividends, etc., they offer so much growth. Where on the other hand, SCHD does hold on to sort of tried and true defensive names that do pay dividends, do pay a nice amount of dividends actually to start, and offer some nice healthy dividend growth. But still, names like these, at least for the most part, are not necessarily going to outperform the names in VOO, again, just in my personal opinion. But don't take my word for it, we need to stack up VOO and SCHD side to side, look at the total returns, which are price return plus dividends included. The total returns for both these ETFs historically have been very good. SCHD is in the orange, VOO is in the blue, and as you can see, for the most part, both these 2 ETFs have tracked very closely together, going up and going down more or less at the same time, even though for the most part VOO has been outperforming just by a tad here and there. Now, I will say during 2022, during the market downturn that we saw, SCHD actually was up a little bit above VOO as far as total return, which again is very impressive because of SCHD's holdings if you ask me. But ever since mid-2023, we can really see the separation happen, and VOO has outperformed SCHD by a nice margin ever since then, and as of to this date, VOO is up around 100% more compared to SCHD over the same time frame. Now, over the last almost 14 years or so, like I said, both these ETFs could have and have compounded portfolios like crazy if you were to have bought into either one of these back then. I mean, imagine how much you'd be getting paid off of dividends consistently, but not only that, imagine how much you're up on your position. So that's why I said towards the early end of this video that for the most part, any well-diversified, low-cost, high-quality ETF as a long-term investment is probably going to be more or less perfect for a long-term portfolio. But the numbers are the numbers, and over the max time frame, at least as of right now, and again, things can change, VOO has dropped a little bit so far this year, where SCHD is basically flat up a little bit, but even still, to be real, like I said, VOO has outperformed SCHD by a decent margin on the max time frame as far as total return goes, and in my opinion, will probably still do so in the future. Now, lastly, you might be asking, well, why in the world are you still buying SCHD if VOO has outperformed historically, and if I personally do think and believe that VOO will at least slightly outperform in the future? Now, that's just because of my personal strategy and objective. I'm not necessarily chasing after the largest total return, although of course that would be amazing. I want to build a portfolio, and am building a portfolio of cash flow and assets, different stocks and ETFs that are paying me as of right now. I'm going to keep reinvesting those dividends, which are at around $7,800 per month on average right now. I'm going to keep reinvesting these dividends and buying more shares of different stocks and ETFs that, you guessed it, are paying me more and more income over time. Now, that being said, in the future, would I ever start a position in VOO or any other ETF for that matter that offers more growth potential? Well, of course I would. But as of right now, my goal still stands. I really want to hit $8,500 on average per month. So until that happens, or until further notice, for me personally, I'm still going after a little more income potential, even if it means I'm sacrificing a tad bit of total return. So now that I share with you guys what SCHD is, how it works, and of course what the VOO ETF is and how it's performed historically, I lastly, most importantly, want to hear from you guys down below. Knowing what you know now, would you purchase VOO or SCHD if you could only choose one, of course, as a long-term holding? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.